I still think that corporate number is going to double over the next year or so. The amount of Bitcoin on the balance sheets are going to go up. And I think there's an even bigger story in ETFs where the flows, from my perspective, are set to accelerate strongly into Q4.
So look, you heard it right there. That was Bitwise's Matt Hougan, who said on CNBC last week that he expects the number of corporations that hold Bitcoin on their balance sheets to double. That's right, double within the next 12 months. And as you just heard, Hougan thinks the ETF inflows should accelerate into Q4 as well. And when Bitcoin inflows to ETFs outpace miner production, price pumps. Now, this claim is very interesting, but it got me thinking on a different track, and that's this. Since we can watch and measure the institutional inflows into Bitcoin, then we can project those inflows into the future. And can we then project how these institutional inflows might affect crypto's total market cap minus Bitcoin and our stablecoins, or the total 2ES? We're talking about the total 2ES again, guys. Get the wife, get the kids. It's going to be a good time. I think we can do that, and we're going to do it today. So here's our 3 specific questions. How much Bitcoin might the institutions purchase over the next 12 months? 2, what might that do to the total 2ES market cap? And 3, what does all this mean about the 4-year cycle versus the extended cycle theory? It's a lot to cover in this video, so strap in, it's gonna be a good time. So let's get started. First question, how much Bitcoin might the institutions purchase over the next 12 months? And by the way, we're just talking about Bitcoin here, not about the Solana treasury companies or the Ethereum treasury company, just Bitcoin, okay? It's a pretty good indication of where everything's going. Now, by institutions, we're referring here to the ETFs and to the publicly traded companies, okay? That's what Hougan was referring to. And remember, in that CNBC interview, Hougan thought that the number of public companies that are putting Bitcoin on their balance sheets might double over these next 12 months. But of course, unfortunately, that doesn't tell us anything about how much they might buy. I remember a story about like a falafel company in Ontario bought like 10 Bitcoin that made the news in 2022, like, yay, more corporate adoption, right? The quantity and what is bought matters. So here's my proposal. Let's go with a conservative estimate. We'll take the average monthly amount of institutional Bitcoin purchases since January 2024, and then we'll project that average over the next 12 months. Simple enough formula. We're starting from January 2024 because that's when the US Bitcoin ETFs came online. So the institutions held 1.13 million Bitcoin in January 2024. Today they hold 2.6 million Bitcoin, meaning in the last 21 months, the institutions have acquired an additional 1.47 million coins, or about 70,000 Bitcoin per month through ETFs and treasury purchases and strategic purchase and all that stuff. So if we go with the conservative estimate here, then we're simply assuming this trend continues, 70K coins per month purchased for the next 12 months. If that happens, that means the institutions will go from 2.6 million coins today to 3.4 million by October 2026. Now, I do think this could be on a fairly conservative side, but let's stick with the conservative estimate, assuming that Hougan is correct, that will get accelerated uptick in ETF flows in Q4, that the number of corporate buyers will double this next year from 180 companies to 360 companies, and we see significant buying, then maybe we have even more bullish numbers than that. Question number 2, what might all of this projected Bitcoin accumulation, again, not talking Solana or Ethereum XRP, do to the total 2ES market cap over the same time period? Well, before we get into that, guys, if you're trading crypto coins, you need to listen up, because I have a question for you. Will you start taking your crypto trading seriously and move over to an exchange that's going to respect your privacy and give you some insane trading bonuses? That place is called BitUnix. I'm doing a lot of my futures trading over there. You can join me. No KYC, no VPN, no BS. Sign up using the link right down below, and here's what you're going to get. The bonuses have never been crazier, okay? When you deposit $2,000, they're going to put $400 back into your account. When you deposit $10,000, they're gonna put $700 back in your account. That's a crazy, crazy deal, man. Plus insane trading bonuses. And guess what? Every single live stream for the whole month of October, we are giving away $1,000 in every live stream. If you want to participate in that, you got to sign up. There's a link right down here. Go check it out. Thank you very much. Look, back into this topic. Given that we can compare the rate of institutional Bitcoin purchases against the changes in the total 2ES, then we can project the total 2ES into the future, given we have a projection on the institutional purchases. Of course, there's plenty of other factors and unknowns, like more aggressive altcoin stacking by institutions. They're going to buy just shit tons of ETH and Solana, maybe less Bitcoin, for example, retail FOMO into altcoins. But comparing institutional Bitcoin buying to the growth in the total 2ES gives us a strong strong proxy for gauging broader market reactions to these institutional purchases, okay? Projecting is always hard, but this is the formula we're working with. Hope it makes sense. So let's run the numbers. Let's make the projection. So remember that the institutions went from 1.13 million Bitcoin in January 2024 to 2.6 million Bitcoin today. That's 130% gain over the last 21 months, or a 6.1% gain per month. 70,000 BTC. Now, in that same time frame, the total 2ES went from 659 billion to 1.41 trillion currently at the time recording this video. So if the institutions increased their Bitcoin stacks by 6.1% per month, and during that same time, the total 2ES increased by 5.43% per month, which it did, then we have a historical correlation between the institutional stacking of Bitcoin and the growth in the total 2ES. Now, projecting that into the future, if the institutions increase their Bitcoin stacks by another 6.1% per month over the next 12 months, and if history keeps rhyming, meaning that the total 2ES keeps increasing by 5.43% per month, which obviously if we get an altcoin risk on season, that number will be bigger, but let's just keep it with a 5.43% for now. Then where is this bad boy going to end up in about a year from now? Well, at about a $2.63 trillion market cap for all your altcoin bags. That's a 1.86x from here, hence the title of the video. Now look, maybe you're disappointed with this projection. Maybe you're not. But this at least gives us some idea based on historical data what could happen to our altcoins. This is kind of like the base case, by the way. Again, if we get a risk on altcoin season, that percentage gets much higher. And with all the altcoin ETFs, more digital asset treasury companies coming for altcoins specifically, we could see this number outperform the Bitcoin number in the same time period. And remember, even if the total 2ES only does another 1.86x from here, the better altcoins should do insane predictions. You know, Solana goes to $1,000, stuff like that. So question 3, what's this all mean about the 4-year cycle versus the extended cycle? Well, if what Hugin is saying is correct, that the number of public companies holding Bitcoin on their balance sheets will double over the next 12 months, then to put it plainly, see you later. 4-year Bitcoin cycle was a nice narrative. It's cool while it lasted, but you're done, son. Or let's put it another way. If the number of these bad boys is really going to double from 180 to 360 companies owning Bitcoin, not to mention, of course, all the altcoin stuff going on over the next 12 months, then do you really believe that the total 2ES is simply going to just follow a 4-year cycle, hitting some kind of peak in like 2 months' time, entering into some brutal bear market in 2026, the bottom coming in the near end of 2026?
Pete?
You do not.
No, it doesn't make sense. The business cycle, of course, agrees with that. The credit cycles agree with that, and everything else, macro-wise, agrees with that, as well as logic. If this prediction is true and we double the amount of companies owning these assets, we're going way higher for way longer. The only logical conclusion I can come up with is that the total 2ES continues grinding up from here until the end of the year, and then just keeps grinding higher and higher to Q4 of 2026, at which point the business cycle may end, and then we finally enter our bear market in 2027. If that happens, ladies and gentlemen, it will mean a clear and definitive break from the 4-year cycle, and will firmly be within an extended cycle, proving once and for all that we really follow the business cycle and the credit cycles. Now, this is what I believe to be the big picture point from Hugin's claims, and it really is the most important point that you should take away from this video. I repeat, this is the most important point because getting into the larger rhythm of this market is much more important than trying to predict some specific price top. I hope you see why. Just one more tip before we go. Keep your eyes on the chart from the website called bitcointreasuries.net. The institutions are this cycle's catalyst. Wall Street is this cycle's catalyst. Yes, retail will come in to buy the top at the end of the cycle. They always do. But who's really going to push us up? It's the suits, baby. It's Wall Street. They're the ones with the infinitely deep pockets, and they are having an insane bid, gobbling up 70,000 Bitcoin a month on average. They've started buying Ethereum. They've started buying Solana and a basket of other different altcoins. Realize how insane all of that is. There's a lot of money in the system. There's a lot more money coming in the system. Get ready. Thanks for watching.